This conference will now be recorded.
Good evening, everybody. This is Greg Morton. It is Saturday, March 12th, 2022, and this is the weekend update for the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. As always, this is for educational purposes only. I'm not recommending any stocks or securities to buy or sell, and particularly lately, all investing has substantial risk of big losses, so we want to learn first and only then invest. So this weekend, we're going to look at the M factor like normally, current trading plan very quickly, and then I'll go over the agenda for our big monthly meeting, which will be this coming Wednesday. So this weekend will be a little bit shorter because some of the material will be bumped to the regular monthly, the 2-hour meetings. So like we normally talk about and like Bill taught, the M's the most important letter in Canslim. We are definitely seeing that now. And as O'Neill said, we look at three things: the action of leading stocks, the actions of stocks we owned, which is still pretty thin pickings as to what's in the group teaching portfolio, and then the market pulse, distribution day count, price and volume on the indexes, as well as the coloring book. So let's get out of here, go over to Market Smith and just look at the daily charts on the indexes, starting with the NASDAQ. So here we go. Ugly week, 3 of the 5 days closed in bear market territory, which is that red line right there. Moving average lines are all in the wrong order: 10, 21, 50, 200 day. You have the what some people call the death cross back here, where the 50 crossed over the 200. Just not much positive. Here's our rally day over here. It looks like it's about to die. If we undercut that low intraday, then the current rally attempt will be dead, and it looks pretty bad anyway. I mean, even if we had a follow-through day somewhere in here, we're below the close of the rally day, and we're under the 10-day and the 21-day, and so we're under the moving average line. So it just it's not pretty, and so we wouldn't have a lot of confidence, would not be waiting fast. We would still follow the rules and buy something if we got a follow-through day, increase market exposure. But if it's way down in here, we're going to be waiting pretty slow, and it may be best to just go ahead and kill this baby off and sort of start over, start counting again when we get another rally day. S&P 500 is a little bit better in the sense that it has not come down to bear market territory, which is the lower red line. Still, you've got the moving average lines almost stacked in the wrong order. You have a death cross about to occur there. NYSE 50 is crossed over, so they're all out of order. Interestingly, it's still just sort of in correction territory, not bear market territory yet. Dow, again, solidly in correction territory, not down to bear market territory yet, but 50's crossed over the 200-day, 10, 21 have crossed or pointing down. Nothing looks good there. The Russell came down one day this week and closed in bear market territory. Again, moving average lines, in the wrong order. You had the death cross way back over here. S&P 600, maybe holding up the best. RS lines pointing up a little bit there, but still you've got 50 crossing over the 200, moving average lines in the wrong order. So just not very much there. Same ugliness shows in the coloring book, which is my sort of supplemental market direction tracking tool. Just a lot of ugliness here. In the 25-day window, I only have 5 buying days, 13 selling days. This week we had 3 distribution days on every index. We had clustering with several of these, which is at least 4 in the last 8 trading days. These were 5 and 7, 4 and 6. Distribution of 11 days, that's just really, really heavy. I know IBD quits counting once they go into correction, but I still count because I want to know if there's still a lot of pretty intense selling, and so there is, as I'm viewing it. Monday's going to be day 19 of this war. That's just incredible that this thing's just plowing ahead full speed. So that's just rattling the market And then we also have the Fed meeting this week, which starts on Tuesday, ends on Wednesday. So we'll be able to comment on that at our Wednesday meeting. So sort of unique timing there that I didn't exactly plan that way. So just not much positive. The S&P 600 had tried to flip to MMTS yellow, or did flip, but it flipped back to red on Friday. Market school exposure is 0, and currently they're in what's called the power outage, which is a term that David Ryan coined. And so we'll talk about the triggers for to be in a power outage, which is the opposite of being in a power trend within the market school model. So we're going to cover that topic in more detail at our meeting this week. So going back here, we looked at that. Still a lot of questions, particularly just with these headlines are really whipsawing the market. The market does not like uncertainty. If we get sort of a clearer picture for the future from the Fed, and particularly if we had a ceasefire or an end to this war in Ukraine, we would expect that would probably trigger a follow-through day if we had an active rally day still. So still sort of a two-faced market. Oil, gas, fertilizers, maybe metals are really the only places that are performing. None of these are traditional growth, but if you rotated to those, congratulations, and you'll have some nice gains. So I kept Marilyn Monroe for one more week. If you're going to be two-faced, at least make one of them pretty. So that's the oil, gas, fertilizers is the pretty one. So like I said, wild whipsaw week, 3 distribution days on all 3 indexes that we track, full week of war, just a lot of uncertainty in those headlines like I was mentioning with the Fed meeting coming up. So officially we're in a correction. For Canslim growth stock investors, it's fine to not be increasing exposure, given all the things we just looked at. If somebody is increasing exposure and maybe you're already in those areas that are holding up, then maybe you can keep wading into those at proper add-on buy points or entries that you see. But still loading pretty slowly, waiting pretty slowly. Again, could have a follow-through day anytime, just not constructive. There are some bases that are setting up. We're going to look at those on Wednesday. And then also, I've mentioned a couple times in the fall 2018 bear, we had 5 failed rally days. We had another 2 failed rally days that had follow-through days. And it was not until the 8th rally day and the 3rd follow-through day that worked. And with all the big headlines we have, we could have more here that fail. There's just no way to predict. We just kind of track it day by day, week by week, month by month. And then as always, what we're really looking for is we'd like to see the NASDAQ trending above the 50-day simple moving average line. We'd really like to see it trending above an uptrending 21-day exponential moving average line. That's when it works best. So we're still in a very hostile environment. We're way below better and best as I set them forth above. And it's okay to kind of say, hey, what's wrong with just waiting for the NASDAQ to retake that 21-day line? And there's nothing wrong with waiting on that. So our monthly meetings, we'll meet this Wednesday. As I mentioned earlier, we'll get the Fed results the same day. Here's the agenda. I pretty much have it finalized now. So we're going to look at the impactor, kind of like we do each weekend. May give a little bit more detail on that. Going to cover recent Canslim nuggets from IBD Live. Going to talk about that 18-month line hidden on the MarketSmith charts and why it's there. We're going to talk about the power trend and the David Ryan inverse power outage. We're going to talk about the RS line. Don't leave home without it. That's an important educational topic now. And then we're going to kind of dive into this, sort of a long-term perspective, looking ahead as we're looking for some true market leaders. Sort of, I've labeled it getting charged up. So what are some potential cousin stocks in this EV space? What industries are going to benefit from that? So we're going to brainstorm and talk about that a little bit and look at some stocks in those areas. And then I'll follow up last month when we talked about bottoming bases. I sent the question in I had last month and got an answer back from IBD, so I'll follow up on that. We'll look at the group teaching portfolio, look at the sold page, year-to-date charts, talk about one screw up I made recently that I'll show you in the group teaching portfolio, because we learn from our mistakes and y'all can learn from my mistakes. That doesn't cost you anything. I'll mention the IPO market. Well, not really. It's just dead as a doornail still. So it goes away. When the bear comes out, the IPO market goes in the hibernation cave. So it'll get better when we, get past this bear market. I just don't know when that will be. And then we'll talk about when we are in a bear market and we're looking for a follow-through day. We've had a rally day. I sometimes will do a separate follow-through day watch list. So I'm just going to walk through what mine is currently, show you the tickers I have on there, and explain why they're on there. They may not be actionable yet, but I'll explain why I put them on that list to keep an eye on. And then we'll do open mic Q&A or written Q&A at the end, whichever way y'all prefer. So here's the details on the meeting, 7 p.m. Eastern. These are recorded. You sign up at the Stockyard Meetup site. Tuition for the meetings is $12. That includes the recording, the slide deck. You can attend live if you want to, or not attend live if your schedule doesn't permit. Those can be ordered later, but it's $15, so it's easier to just sign up for the live meeting and for me to send out everything at once. And if you're a first timer, welcome, and I send you a courtesy copy of the February meeting recording, slide deck, and related links. And then if you're interested in some of our prior meetings and the educational topics, if you don't have written cell rules, I spent 3 months teaching that and a lot of time putting that together so you can have your own set of written cell rules. Bad markets are a great time to study, do research projects, fine-tune your rules, your procedures, study, read. So these go along with that. Complete weekend routine. I did that in September and it flowed over into October a little bit. We looked at prior bear markets. We've talked about the rally day, follow through day system, viable gap ups. We had one of those recently, so we'll talk about that Wednesday. And here's all the contact information. So the Stockyard Meetup site, you can just Google it. You can register for the meeting if you want to come Wednesday. You can email me if you're interested in the prior meetings. Just send me a direct email and I'll send you the list and the ordering information. You can follow me on Twitter and then also watch our videos on the YouTube page, which is where you are now. So just like and subscribe while you're there. And there's some other teaching videos on there, so it's a good time to study those also. So that's it. You guys have a great weekend routine. Hope to see a lot of you on Wednesday. I think we have some interesting topics to cover. And again, bear markets are a great time to get our study work done. That's it. I'm out of here.